The AI revolution is here, with NVIDIA's meteoric rise up 600% in just 2 years. Their groundbreaking GPUs are turbocharging your world's largest company's advanced AI algorithms. With massive data centers needed to train and deploy these complex models, a new revolution will closely follow. The AI revolution is causing a massive surge in energy demand. Think about it, every time you use an AI service like ChatGPT, it's being processed by an enormous data center. Morgan Stanley predicts energy demand from Gen AI will increase an astronomical 70% annually through 2027. What the market hasn't realized is there's one company in the perfect position to capitalize on the next energy revolution. This company quietly powers data centers and cloud computing around the world for Google, Amazon, Microsoft, and more. And recently, they were awarded the largest energy contract in history to power over 10.5 gigawatts of Microsoft's cloud computing over the next 4 years. That's Brookfield Renewable Partners, or BEP. Brookfield owns and operates renewable power assets including hydroelectric, solar, and wind across the globe. They are also involved in nuclear and energy storage services. The company was founded in 1999 and headquartered in Toronto, Canada. Brookfield is expanding rapidly, bringing online 7,000 megawatts of new capacity this year alone. That's like adding a small country's worth of power to your portfolio. Speaking of adding country's worth of power, it is widely estimated that global electricity consumption from data centers will increase to 10% of total electricity demand by 2030, meaning to satisfy the needs of data centers alone, the additional capacity required will be equivalent to the size of the entire current U.S. grid. Currently, data centers make up just 2% of total demand. Excitingly, for the last decade, Brookfield has positioned the business to capitalize on these trends by building a leading global development platform, combined with an early focus on marketing and tailoring capabilities for corporate power, to serve the needs of the largest and fastest-growing buyers. BEP is moving with a heavy focus on solar, which is now the cheapest and most efficient form of energy in the world. The beauty of the business model is that after the initial investment, projects generate a steady stream of cash flow with low operating costs. Then, the new cash flow is used to reinvest in rapidly growing their portfolio and paying back investors in the form of dividends. Brookfield offers an attractive yield of over 5.7%, which is projected to increase by 5 to 9% annually. As rates come down, so will the cost to invest in new projects, making BEP even more appealing. Now, let's dive deeper into the combination of accelerating global trends and why they provide significant tailwinds for Brookfield specifically. Very briefly, if you're new to the channel, my style of investing is identifying deep-rooted macro trends, then selecting excellent companies well-positioned to capitalize on future growth. The first macro trend, as we mentioned, is exponential energy demand from the AI revolution, plus potentially just as massive demand from EV adoption and increased urbanization. Increased demand will propel Brookfield in securing new contracts and enhance their pricing power across their new and existing portfolio for years to come. Brookfield is in an increasingly strong position as a market leader who is starting to see immense demand from businesses around the world who seek a partner with the capital and experience to help them transition their goals and enhance value. Second, there is a major trend for corporate renewable energy demand. Companies like Apple, Meta, and Microsoft are all committed to achieving a form of net zero emissions by 2030. There are certainly incentives for corporations to do so, as it will ease regulatory pressures, bring in major tax credits, enhance their reputation, and can simply be a cheaper and more efficient form of power. Brookfield's ability to secure hefty contracts with current partners including Amazon, Walmart, and Google demonstrates their credibility in the field and potential for future expansion. As they state in their annual report, the largest cloud computing businesses run on clean power. These companies have 100% clean energy targets and have been growing their consumption by approximately 50% per year, making them the largest buyers of green power globally. Their landmark Microsoft deal is for over $10 billion in new developments, almost 8x larger than any corporate power purchase agreement in history. And it gets better. The contract includes provisions to expand capacity should Microsoft need additional power. Third, the global shift towards renewable energy is being propelled in part by massive regulatory support and policies from governments worldwide. These come in the form of substantial subsidies and tax credits for companies like Brookfield and cutting red tape to accelerate their projects. Brookfield Renewable operates primarily in North America, Europe, and South America. These countries all have incentives and credits including Europe's REPowerEU program and the US IRA Act, which provides substantial financial support and incentives to slash costs and speed up renewable energy projects. Now that we've touched on the macro trends, what makes Brookfield specifically special? Well, BEP is the most attractive company in its industry for a number of reasons. First, Brookfield is known for its exemplary capital allocation. They often purchase existing plants at attractive valuations, then optimize their performance by cutting costs and driving efficiencies through rigorous monitoring systems. As management describes, their growth strategy combines a value investment approach of both acquiring and building new plants. They are disciplined with their capital, investing in projects to deliver a targeted 12 to 15% annual return for shareholders. After driving efficiencies, part of Brookfield's strategy is to sell plants for attractive returns and use these funds to fuel future growth. For reference, in Q1, Brookfield Renewables financed $6 billion in new projects, while generating $3 billion from sales. Brookfield's access to large-scale capital, its sizable development pipeline, and ability to commission significant capacity to meet customers' demand make them stand out from competition. Second, Brookfield has strong fundamentals. With a robust balance sheet, BEP has over $4.4 billion in available liquidity, enabling the company with flexibility for strategic investments and growth. Their long-term debt is well-structured, with an average maturity of 10 years, reducing refinancing risk and supporting sustained growth. Approximately 90% of their energy generation is contracted, providing predictable revenue streams and cash flows. Their portfolio of renewable assets are vital infrastructure to power both communities and corporations. These projects are diversified across the world in 5 continents. You should know, Brookfield Renewables trades under 2 tickers, BEP and BPC. They are one-to-one equivalents of the same business. One is just a corporation, BPC, making it easier to hold in non-registered accounts. You should also know that Brookfield Renewables is a subsidiary of Brookfield Corporation, a Canadian asset manager among the top 5 in the world. Brookfield Corporation is known for its exemplary capital allocation all around, with the corporation's CEO Bruce Flatt being nicknamed the Warren Buffett of Canada. So, what does this mean for investors? Brookfield Renewable Partners offers a compelling investment opportunity. Their strong financials, diversified portfolio, and strategic positioning in the renewable energy sector make them a solid opportunity for long-term growth. The risk-reward potential is increasingly interesting. The stock currently offers an attractive dividend yield and has the potential for substantial appreciation as demand for renewable energy continues to rise. With their focus on sustainable solutions and their ability to secure large contracts, Brookfield is well-positioned to thrive in the coming years. Management's outlook is on returning 12 to 15% annual long-term returns for investors and are confident in the unique position they have been building for decades to capitalize on the new energy revolution. As with any investment, it's crucial to do your own research and consider your risk tolerance. Remember, never buy just because I am. I own BEP and had it on my list of stocks to buy in July. Going forward, I'll continue to dollar cost average whenever the stock is under $35 with a long-term time horizon. If you enjoyed this video and want to stay updated on my investing philosophy and insights, make sure to drop a like and subscribe. Drop your thoughts and questions about Brookfield Renewable Partners in the comments below. Thanks for watching, and until next time, keep investing in your future.